Hello, welcome back. Investing in residential property for beginners. What's it all about? Well, last week I did a video on investing in commercial property. So I'm going to be running a series of videos for commercial property investing and also residential property investing. And this particular video is part one for residential property investing. So this video is not really about buying residential property for owner-occupiers, in other words, buying a family home to live in. It's really for people that are investing or want to invest in the residential real estate space in Melbourne in particular. So for beginners investing in residential property in Melbourne, they need to be aware of the 6 different zones. There are additional zones, but these are the 6 main ones they need to be aware of. There's residential growth zone, there's neighbourhood residential zone, general residential zone, low density residential, township zone, and there's also mixed use zone. And those 6 zones make up 99% of the residential zones here in Melbourne. But each one of them, depending on the zone of the property, will also determine the value of the property and what restrictions are placed on the land. So whenever you're investing in residential property, you always need to start with zoning. Now, often these YouTubers and spruikers and social media experts never talk about zoning when they're talking about value and data and all this data-driven stuff that you hear about. So it's the most frustrating thing that I listen to. You listen to all these so-called experts that have no idea what they're talking about, and a lot of it comes back to not even understanding what zoning these properties are on, and really this is the place to start. Now, why is zoning so important? Well, it's important because it's also something that the banks look at. Not only does zoning impact value, but it also impacts risk. And risk is something that the banks are experts at. And I can tell you zoning is something that they look at, not only for commercial property, but for residential property as well. So when investing in residential property in Melbourne, there are 3 different asset classes. So the first one is family home, the second is townhouse/villa unit, and the third is an apartment. All 3 are completely different, and all 3 could be on 6 different zones. So when you hear these people on TV and social media, when they're talking about homes and villa units, townhouses and apartments, the first question I'm thinking is, okay, mate, what's the zoning? What zone are these properties that you're talking about? What zoning are they on? So that's the first thing you need to be mindful of. So when we talk about a family home is pretty easy to understand. It's just a block of land with a building on it. Most of you will understand that. I'm not going to spend too much time on that, but family homes make up the greatest number of property purchases, okay? Because that's what people want. People want land, and also for investment purposes, they make up the best investment because historically, yes, it's true, homes appreciate more than other asset classes within the residential spaces, all things being equal, okay? Just talking generally here, not specifically, obviously because of the land content. So land goes up, buildings can go up as well. We've spoken about that before, but generally what happens is buildings depreciate. So if you're spending a lot of money and most of that money goes towards the land, chances are you're going to get good capital appreciation. So a family home is the first asset class that I want to talk about, and most of you will understand what that is. The second type is what we call a townhouse. So if you look behind me, they're townhouses, right? They're attached. And the second type are townhouses or villa units. Now these properties behind me are still homes, and they still classify as a home, okay? But they're generally on a more compact block, okay? So and what happens over a period of time, the blocks get smaller and smaller. So you would still classify these properties behind me as a home because that's what they are, and they're worth millions of dollars, right? So, but the second type of asset is what we call a townhouse/villa unit. So what's the difference? Well, a unit, so when we move away from homes and houses and we move towards units, there are 2 types generally. There's a townhouse and a villa unit. The townhouse is a double story and the villa unit's a single story. That's the difference. However, those units, the townhouse and villa unit, they can have common area and they may not have common area. And so if you look at a corner block that's been cut up into 2, both units with street frontage, that's an example of a villa unit or a townhouse with no common area. So there's no shared driveway or anything. But when you're looking at units, maybe 3 or 4, one behind the other, that will have like a common area driveway. So the different types of townhouses and villa units depend on whether it's got common area or whether it doesn't have common area. And the third type of residential property is an apartment, okay? And most of you will know what an apartment is, but apartments can be anything. They can be on commercial zones as well. So, and we do buy lots of apartments for our clients, but we only buy specific types with high land content. I can talk about that another time. So just in summary, I just want to summarize again. When you're buying residential property, it's really critical to understand zonings and what they are, okay? And the difference between the different zones. The 6 main residential zones in Melbourne are residential growth zone, general residential, neighbourhood residential, mixed use, township zone, and low density residential. And they make up probably 99% of all the zones here in Melbourne. The 3 different residential types are houses, villa units / townhouses, and apartments. So that just gives you a brief summary. When you want to buy, if you want to buy residential property in Melbourne, you really need to understand zones, and you need to understand those 3 different asset classes. So the 3 fundamental areas that I look at for my clients before investing in a property are 1, cash flow / yield, 2, capital growth, and 3, improvement opportunities, right? So just very quickly, cash flow, well, someone's got to pay the mortgage, and also the banks look at the yield. So the yield is really critical. It determines the risk profile of the client, and also too, ultimately, these properties need to be cash flow positive, and ultimately they need to be a passive investment for the investor, okay? That's why you're buying. Otherwise, why would you buy a property? Sure, it can go up in value, but at some point you need to be living off that cash flow, that passive income. The second thing is capital growth. That's the reason why most people buy residential property, and that's what you hear a lot about, you know, the hot 100 suburbs, and you know which suburb's going to fly and grow, and all this other stuff. So it's quite incredible some of the information out there about which suburbs to invest in. Look, it's interesting. Look, yes, capital growth is critical, and that's why people buy investment properties. But we need to look at what are the drivers of capital growth. Now, there may be postcodes where maybe in the interim period there's a high demand for real estate in a certain postcode with very limited supply. And yes, you might get a bit of a sugar hit, you know, if you're a flipper, someone that buys and sells property. But if you're looking at real estate on a medium to long-term basis, and you're looking for recurring capital growth and durable growth moving forward, then we really need to talk about what are the main drivers of capital growth. The main driver is actually credit growth. Without credit growth, you don't get any growth at all. So if the banks aren't lending, there won't be any capital growth at all in the marketplace. But putting that aside, you know, the 2 key areas that the 2 fundamental drivers of capital growth are good schools and good employment opportunities for people, okay? Because that's why people buy in those areas, to send their kids to school, right? And also in an area where they have good employment opportunities close by. Now, you've got to also think, we're not talking here about family homes, right? We're not talking about where you want to live. We're talking about investing in residential property, meaning tenants need to live there, right? So a tenant, when they're looking to live somewhere, where are they looking to live? They're looking to live somewhere where they can send their kids to good schools, and somewhere where they can have, you know, easy access to work, employment opportunities. So they're the 2 areas, the fundamental areas that cause capital growth. They're the key drivers. Now, yes, they're also drivers of growth for family homes, but you know, the 2 main things you need to look at as a residential investor are those 2 areas, and not the sort of things that, you know, that I hear on social media about a lot of this data-driven decision making around which suburbs are the ones to grow. So capital growth is really, really important. But the way I see capital growth, and I usually look at the historical data to see, you know, what's happened historically, and chances are that that's likely to, you know, continue in the future. You know, suburbs that have grown quite strongly this year may not grow as strongly in the following year, but a suburb that's continually shown growth and continually shows an influx of people into that suburb, good job prospects and good schools are the suburbs that I like to look at. Okay, there are other things as well. There's a lot of other things that we'll discuss ongoing, but they're the key things: good schools, good employment opportunities, and good access to transportation, etc. Throughout Melbourne. And the final thing, the third thing, which is really important, is can we actually improve this property? Can we improve the rental? Can we get the rent up, and can we get the market value up? So can we put a new kitchen in, a new bathroom in? We don't want to be paying for someone else's profit, right? Can we subdivide the land? Can we go up? Can we put an extra bedroom? What are the things we can do to drive the rents up? What are the things we can do to drive the market value up? Okay, so they're the three things, and I'm going to talk a lot about this in future videos. But just very quickly, I just want to summarize again. The 6 different types of zones. It's really critical that you understand what zones are and how they impact value. The three different types of residential asset classes: okay, house, townhouse/villa unit, and apartment. And also the 3 things that we need to look for when we're buying residential property: cash flow, capital growth, and improvement prospects moving forward. Okay, hopefully you've found this video valuable. If you have any questions, please email me or text me. But I'll be running a series of these videos to help both beginners, investors in the residential space that are just starting off, but even seasoned investors. I'd love to have a chat with you. People looking at building a portfolio of residential property. There are a lot of strategies around in terms of how to invest in residential, and also maybe diversifying your investment into commercial as well. So there are quite a few different strategies that are available to investors moving forward. Thanks for your time.